let's get into a look at the Zimbabwean markets now with Sebastian Gumbo. He's chief dealer at Imara Edwards Securities. Sebastian, thanks so much for joining us on the line. Let's take a look at the market's performance over the last week because it's been pretty tepid. We've had the mainstream index for the most part trading flat and the mining index seeing modest declines of 0.4% filtering through there, but being highlighted on the back of pretty low trading volume. So take us through your interpretation of all that's been playing out over the past week.
Okay, as usual, our market is dominated by the two largest companies, that's Delta and EcoNet, and those are the ones that have changed a little bit, and that is why the index has basically remained flat. Delta's share price has gone up. It's a 2.5% rise in the price from beginning of week, and that is in response to increased demand on the back of limited availability of scrip on the other end. Meanwhile, in EcoNet, there has been a bit of selling, and that price has retraced about 3% in value, and that is mainly on the back of profit taking.
Let's take a look at what's provided incentive for investors to start delving into Delta Corporation, because they had their maiden quarterly trading update released, and it was followed by a second quarterly update yesterday. So take us through the detail there and what kind of expectation it's set when it comes to their earnings report. Full year results expected to be published on the 16th of May.
Okay, as usual, the company has maintained a strategy to move away from the lower margin, high volume products, and that's in particular the sorghum beer product. But we've also noticed there's a bit of product innovation kicking in there as well. That sorghum beer product has been modified slightly to increase its shelf life and increase margins, and that product itself was released about 2 weeks ago onto the market. We've also seen that they've continued on the drive to perhaps move away from capital expenditure, which is being necessitated by the growth in demand for volume. But seeing that they're moving away from volume now, it looks to us as if there is an inclination towards higher dividend payouts, and we think that there's more value. I think more and more of their value will be paid out to investors in that manner as opposed to capital gains in the share price.
So with all of that being said, your recommendation on the stock right now, what are you making of current valuations?
We still think the ratings are a little bit demanding but justified, such that there is prospect for gains in the future. It's mainly on a dividend discount model now rather than on an organic growth sort of model. Yes, they will sustain some sort of volume growth, but it will not be as big as it has been over the past 2 or 3 years.
Let's shift focus to EcoNet. You alluded to it right at the top, saying that it has seen a bit of a pullback, and that on the back of profit taking. Sebastian, fundamentally speaking, I mean, what are we looking at when it comes to EcoNet, and what's your view on the stock?
Okay, our view is still it's a long-term buy. There is a lot that they've done right, especially as well in the mode of product innovation. The acquisition of TN Bank as well has also put the group in good stead. They should be able to leverage off some sort of synergies with respect to that bank. But I think the crown jewel at the moment will be the EcoCash product, which has increased mobile penetration and the use of mobile services across a wide spectrum of Zimbabweans. And that should protect them from competition because it creates a barrier to entry for their competitors. So overall, strong cash generation, good product, generally good management. I think it's a good value proposition as well for investors.
So those just a couple of the stocks that are on your radar screen right now. Sebastian, overall, what's sentiment like when it comes to where this market is headed? Because having just concluded the financial reporting season, we've had a lot of exuberance hit investors, but being noted as well and at the same time is that there are certain factors that are impeding economic growth in the country, and that standing as a pretty big obstacle.
Yes, I think since dollarization, the main theme has been the lack or the deficiency of infrastructure on the ground. A lot of the companies still report problems with availability of utilities and the cost of those utilities. I think the World Bank estimates that Zimbabwe's annual GDP could grow by an additional 2.4% if we improved our infrastructure endowment to the levels witnessed in middle-income countries such as Botswana, Angola, and maybe Ghana. So that could possibly help the local industry. But also, the government is not resting on its laurels. They are a little bit hamstrung with the lack of availability of funding, but they are rehabilitating and expanding electricity generation at the main power stations at Kariba and Wange. Resources have also been poured into the dualization of the road network, especially what we call our N1, which stretches from Harare through Bulawayo all the way to Plumtree Border Post. And so there is a bit of work that's being done on the ground, but there could be a lot more investment, especially in the areas of the water and reticulation system, and as well in the railway system.